4 separate reasons to expect resistance, stacked at one price. Most charts teach that as a wall. Direction comes first, and it comes from the last few days of closes, not an indicator. Each pullback here stops higher than the last, so buyers are in control. Now, price reaches a band where 4 independent reference points overlap inside a few pips. That tells you the market will react there. It does not tell you which way. Price sits under it and goes quiet instead of turning away. Then, it drops back through the band, flushing everyone who bought too early. If you read the level as a wall, this looks like proof. In a live uptrend, it is usually the last shake. Because the traders knocked out here would have sold into the rally. Keep the 4-hour picture at the top and drop into the 15-minute chart underneath. Same day, the hours straight after that dip. So you can watch how the shake resolves inside the session. Price pokes above the band, then the next candle gives it all back and closes under the floor. On its own, that is a failed breakout, and plenty of traders short it. The honest answer is that you do not know yet. Wait one candle. That candle undoes it completely. It closes back through the whole band and finishes at its high, on about half. Again, the volume of the quiet bars and the bars after it trade more, not less. Expanding participation is what separates a real break from drift. The stop belongs under the low of the shake, not under the breakout candle. That low is what would prove the read wrong, because if price trades back there, the flush was real selling. A stop under the breakout candle only proves a normal pullback happened. A coil that releases with the trend is a runner, so manage it by structure. Yes, each new high leaves a higher low behind it, and the stop follows those. Notice the pullback stops above the band. It just broke. Old resistance holding as support says buyers are still behind the move. Trailing is what keeps you in for the rest of the session. A 1-to-1 target would have closed this inside the first hour. From entry to the day's high was more than 3 times the distance to the stop, and moves like that pay for the ones that fail. One chart proves nothing. Across 195 hand-checked breaks on this pair, the direction of the recent trend decided almost everything, and rich clusters inside a trend released far more often than they held. So, read the cluster for importance and the trend for direction. The dip through it is usually the shake, not the reversal. The full study, all 195 breaks and how each was graded, is free on the Open Market Journal.